Peter McGuire, CEO of Trading.com. 71 points down is what we expect to open with. Could get worse. Peter, this morning, it's all about the big, beautiful bill and whether the rest of us will pay the price for that bill, isn't it?
Yes, absolutely, Tamana. And good morning. Greetings from Sydney. Yeah, I think it's hit everyone by surprise as far as, first off, the magnitude of the bill. And as you mentioned in the lead-in, as far as bond yields, I wouldn't have expected a 2-year to be at 4, 10-year at nearly 4.6, and you've got the 30-year at approaching 5.1. It's rocketed up over the last couple of trading sessions, and as we know, that's the price of buying money and return. So I wouldn't be surprised, possibly even a 10-year, it may nudge a little bit higher. 475's got to be a handle.
Peter, the question then, hi, morning, Alex here. The question is, if safe havens are not being bought, as was evidenced by that 20-year auction that didn't do too well in the US yesterday, which pushed bond yields higher, then is the only avenue that investors can hide in gold? And do prices go higher? What is your estimation?
Well, I do think so, Alex, and that's you've summarised it to the point where it's the cost of money, and that's what it's bid up. And if you've got to put a more attractive yield there to get a buyer. As far as gold's running, it's still at 100 to 1. We've got to look at the 100 to 1 ratio as far as gold to silver, and gold sitting at 33.70. Yeah, I feel as though that there's going to be more momentum there. You've got a US dollar running at the best part of that 99.5, what is it at the moment? 99.57. So yeah, gold to jump, and let's have a look where that runs again over the rest of this month. I wouldn't be surprised, a 34.50 to 35 handle, very achievable.
Just very quickly, what does this augur? Does this augur bad news for emerging markets like India? Peter, we've already seen FII outflows pumping up. And of course, 1 or 2 days data doesn't make a difference. But if your 30-year or your US Treasury yields are going to spike, what does it mean for emerging markets like India?
Well, I feel as though that possibly you could have a little bit of a correction. I wouldn't be thinking too much, Tamana, but you've got to look at the flight to capital. And maybe in the short run, you could see just a bit more softness. We've got to look at equity markets globally to take that on board. But, the yield certainly from a bond yield perspective is one of much attraction. And when you can buy money you can get a return on your money at that sort of rate, risk-free, it takes a lot of pain out of it. So we've just got to wait and see again what happens across equity markets, currency markets. So that's very much concerned. And then commodities and rolling that across to, equities.
Peter, thanks so much for joining us this morning. Absolute pleasure having you as always, and look forward to the next chat as well.
Thank you.